So we're back. This time it's not such big of a break as we did last time with a couple of months. So we're already recording the next one. And what's going on? As always, what's up?
Uh, we back. We are so back. Life is a cycle. It's over and we are back. But it has been a good week, especially for me. Like I did some crazy percentage on my portfolio and for the client's portfolio. And yeah, the plays we laid down in the Substack report going into 2026, our outlook played out perfectly. And I'm happy, bro. What about you?
It's been a nice start of the year. Like I have a lot of stuff in like small caps. AWM has been going good, and like my individual names have also been doing well. Then yeah, Venezuela with the whole situation been good for some like oil related investments. Some like
Exactly. Yeah.
uh, SLB oil services has been really on the chair. It's crazy. So yeah, it's good. Let's just say a good start to the year.
Good start. So yeah, actually, I got some interesting idea to the IWM trade, which is a with the RSP. Like I think
Yeah, equal weight spy.
the equal weight will outperform the S&P 500 and the QQQ. So what I have done is a butterfly strategy, buying the RSP and selling the QQQ and selling the Nasdaq. But I
Hmm.
did it through the diagonal spreads, which is a diagonal calendar butterfly. You can call it what you want.
Yeah.
Basically, I'm betting on breadth improving and selling some rich skew on the QQQ,
So more of a like
monetizing the
a
butterfly.
catch up and not only like the a few big stocks
Exactly.
leading the markets, but now it's time for
Yeah,
like for the market to catch up.
yeah, exactly. Because if we recap the tape before we dive into macro, because we had a lot of macro data and the Venezuela event,
Mhm.
the invasion, or the I wouldn't say it's an invasion, it was a targeted operation to capture Maduro. So
Yeah, it
let's
definitely
just
wasn't an invasion, but it was a
yeah,
crazy intervention there. And also like
yeah,
all the oil tankers, like the stuff that's getting seized and the blockade. It's a lot of shit going on. Yeah.
exactly. So yeah, let's recap the tape for this week. Starting with the countries, I wrote down the best performer was Greece, which is up like 5%. Chile is up 5.8, Peru is up 5.8, South Korea is up 9.6, and Colombia is up 6.2. And just if you look at it from a broad macro without understanding what's going on in Venezuela, because it's mostly Latin America that's performing that good, it's a risk on regime that we are in. Like Greece is performing 5%, risk on. So from countries, it's looking good, looking beautiful for continuation and broadening out in the market and trading the Goldilocks steepener trade, as we talked about. Bread is also improving, bro. Like we have almost 70% of stocks are above the 50 days moving average in the S&P, 62% above 200 moving average, and 68% above 20 days moving average. So, which is we see this rotation or on a relative basis to the RSP. I think today the RSP is outperforming the S&P 500.
More or less, but
Yeah,
yeah.
yeah. Like these rotations take time. It doesn't happen in one day, and you see the RSP is ripping 3% and the SPY is ripping like
But for example,
or tanking. Yeah,
just a curiosity, because for me to manage the IWM position, if this rotation goes away from, or not, I wouldn't say away, but not as much into the big companies, the large companies as have been like mostly giving the gains of last year or the recent time, and more into just the broader stock market, broader companies, not the flashy big names, not the Mag 7 or so. Is this also why we have been seeing such good performance in the AWM? Like a lot of like just recently this week, I've been noticing the AWM has like performing quite well. Is this also kind of working together with the like rotating out of the big names more into the smaller names?
exactly. So the RSP is less riskier than the IWM,
Yeah.
if you think about it in terms of risk and volatility. So if we get a full scale risk on rotation, you will see the IWM outperforming the
Mhm.
RSP. But on a normal days where we have no macro events or no big positive risk sentiment or any upside surprise in growth, any upside surprise in sentiment, what will typically happen is that the RSP will outperform on a relative basis. So we might see, let's say, IWM is flat, slightly up, 1/10%, while SPY and QQQ are down, and the RSP
Mhm.
is up like 0.5% or 0.2%. It depends. This is why I used calendar diagonal spreads on the structure. I don't want to dive deep into the structure because it's more of for clients because I don't know when the rotation is going to happen and how the rotation is going to go aggressive. So I would like to have some theta working for
Mhm.
me on the position and also have the ability to engineer a credit-free position or receive some credit with because I don't want to pay money betting on timing. It's
Yeah,
quite tough
yeah.
in markets. So yeah, if we look at sectors this week, bro, as you said, oil service is up like
Mhm.
11%. We are long SLB, Schlumberger. Uh, it did perform very, very well, the structure that we had. And yeah, anything from your side?
For me, like, yeah, mostly what has been working are like these smaller names. Like I have a few, like I have a big watch list with all like these more like super small companies, but that are a lot about like hype, a lot about momentum. And this has been like working super like really, really well with the IWM because the IWM has been performing so good, it has been performing like so good that these small, like super risky, high leveraged companies have been also performing quite well in this like bull market sentiment, business sentiment. Like, yeah, December might have been a little bit slow in the market and like the S&P and whatever, but now it feels like the new year is there, and it feels like the small companies are there to really like perform and go crazy. So this is what has been like from the beginning of this year working quite well.
What's actually interesting to your point is that the best performing factors, if you look at it, growth against low volatility, growth against these factor investing, the best performing factors are small caps, the growth one, the core one, the value one, and the RSP year to date. So you got small caps growth up 3.9%, the core small caps up 3.8%, and value small caps up like 2.7%, which is also again the same play we are talking about,
Hmm.
broadening out, breadth
Yeah.
improving. We see rotation out of big cap. The best performing sectors, again, oil services, XME, which is metal mining, PBW, which is clean energy, and the laggers are XLU, for the year. Why? Because everyone is believing there is a risk on steepening Goldilocks that we are going into, which is also backed up by the data, because I'm gonna dive a little bit in a couple of seconds into the macro data.
Hmm.
But the XLU had also this kind of small leg into it, which is the AI trade. We need some more energy for AI, and
This
which is
was,
also
yeah,
quite interesting for Venezuela because everyone's thinking it's about oil. No, no, it's about AI, and it's quite tough to explain why.
maybe not
Uh,
Venezuela tech, but
no, it's not Venezuela tech, but it's Venezuela's resources,
yeah.
which is the energy resources for the AI run.
Yeah,
Because
it's crazy. Like the the war about AI between, or like war, as you can say, technology war between China and the US. It's, I wouldn't say, unless yes, obviously about the technology, who has the best models and so on, who has the best chips, but really it is about the energy to be able to use all this stuff. Like China has been like heavily already with the last like recent years investing into nuclear and all that stuff in order to get their like power online in order to now be able to capitalize on this and yeah, the, like get a leading in AI and stuff. And I think the US is kind of waking up to this, like they need a lot of energy. And it's, yeah, people have been talking about it, but now looking at like these nuclear stocks, like there's Oklo, of course, and then SMR is one ticker. Like these have been also going crazy. Like, and I think it is. just waking up to the realization that due to all these AI data centers and all this AI stuff, there's just not enough energy. The grid might be not modern enough, but mostly it's not enough energy to
Exactly.
yeah provide all this for the data
This
centers.
this was the problem for Venezuela because Trump wanted them to pay their debt back because, as you know, everyone owns money to the United States, and they couldn't. So he was like, "Okay, I'm gonna take your resources." This is one part of the agenda. They did it for Ukraine, by the way, with Ukraine the same way.
Yeah,
They
the
took their
minerals deal.
minerals
Yeah, yeah.
exactly. And the other side was the strategical geopolitical game between China and the United States. And as you have been, if we go back a couple months ago, we had a lot of reports coming out of China that the tech or the AI in China advancing at a fast level.
Hmm.
So this advancement in AI requires a lot of energy, and the best way to stop it and to stay as a leader in this game for United
Cut them
States.
off by the sources, you know? Yeah.
Exactly. So to capture
Yeah.
the entire energy. And the next one is going to be Iran. It's going to be Iran and Israel again. Because the oil analyst at the firm called me today. We had a meeting. He was telling me, you know, they took all of the diplomatic guys from Iran out,
Mhm.
and the same pattern is repeating. All the American diplomatic guys are getting taken out right now. So we could see
Not taken out, but
um,
flown out.
no, not taken out. It's our the wrong word.
Yeah.
Getting
They're flown
secured,
out.
you know?
Yeah, yeah, yeah.
Exactly. They're getting secured, taken out. Getting secured. And then the next step is gonna be like Israel is gonna attack Iran again. And
Yeah.
this would be the catalyst for a long oil. Because if you just look at the charts, you know, after such a bearish, slightly neutral catalyst taken off Venezuela,
Mhm.
because the narrative is okay, we're gonna increase supply and more oil is gonna hit the market. Oil didn't react in a bearish way at all.
Yeah.
We're still holding the lows and we are breaking out of this downward channel. If you look at it, we are trading on crude oil back to 60 almost, up 3% today. So this is market positioning shifting before the narrative is shifting.
Mhm.
And there's the other micro drivers with Goldilocks and growth taking place, growth reacceleration from the macro side. And I think once we see Israel striking Iran again, because also there is another interest in LNG and liquid natural gas. I would like to get Noel on the podcast, but he don't want to
Yes, to
speak.
will. Yeah, yeah.
There is a lot of knowledge in that guy, and he can explain it even way better than I. So, in my opinion, what I see in the market, and we bought oil, man, once we tanked back to the lows at 55. You know, we are now like almost at 60 back. And I think oil could be the best performer percentage-wise in 2026 because
Mm,
it's the place where nobody expected to come from. And all of a sudden, boom, you see oil
but
up
what we have against
40%.
that is just Trump who's going to do everything to push that down, down, down. Like he's going to do
Exactly.
everything in his power. Oh, we have to keep inflation low, all that stuff. Like,
Exactly. But what can he do even more
yeah,
than just increasing supply and convincing
who
other
knows?
countries to increase supply? And we
Yeah,
are already in oversupplied conditions.
yeah.
So usually what happens is on bad news, you get a local or a macro bottom following up with good news. For example, for the oil market striking on Iran, and then all of a sudden you see the risk premium and the contracts shooting up and oil trading back at 65, 70 in couple sessions, which
Hmm.
is going to be good for us because we are long SLB, long XLE, and we could engineer some positions being long crude oil on the futures. And
Yeah.
yeah,
Well, so what about
this
the
is
macro? What about the data that we've
the
been getting?
macro. Exactly. So from the macro side, let's stay on in the US because I also have an interesting FX trade. I will present in a couple of seconds. So from the macro, everything came in good. PMI's manufacturing came in bad, very bad. But on the services side, came in super bullish, man. Upside surprise, 54 versus 52. Insane. prices stabilizing, employment picking up. Even within the manufacturing part, we saw employment picking up and prices stabilizing. Jolts came in lower, but at the same time, quits came in higher. So there is people quitting their jobs or the willingness to quit your job because you think you will find a better job, even
Mm.
though jolts came in lower. And ADP employment change came in 41. Expectation was for a negative read of about 30K. And today the unemployment rate came in at 4.4.
Lower.
Expectation was 4.6. And the average hourly earnings also picked up, so wages are going up without seeing a huge impact on inflation because oil is still cheap and the prices
Mm.
in the PMIs still also flattening out or still cheap, not moving up as fast as um, it's necessary to see on inflationary pressure. So macro is telling you stay long, but don't be long the Nvidia of the world. Don't be long Tesla.
Yeah.
Don't be long Apple. Be long the broader market, which is very bullish, by the way. This is the argument that the bears had a couple years ago when
Yeah, it
everyone's
was
talking it's a
only concentration
bubble.
and so on. Yeah.
Exactly. It's a bubble. We see only couple names putting up the entire economy. It's not the case anymore. There's a lot of opportunities out there. Again, XLF, XLI, XLB, XME, IWM, just be long, small leverage, and higher we go. Even the best performer from the FX side, it's the Australian dollar this year.
Yeah,
You
like
know, the,
that's connected with all the commodities and all that stuff, right?
and risk on sentiment. Plus, we see some improvement in the Chinese economy
Mm-hmm.
right now, a little bit. So what we have done is taking our prediction from the Substack, the Australian dollar, the New Zealand dollar, and the Canadian dollar, and we constructed an FX butterfly using three currencies: the United States, also the US dollar, Australian dollar, and the Canadian dollar, betting on an outperformance with a slightly convex payout profile that the Australian dollar is going to outperform the Canadian dollar and the US dollar. Because we see some also macro divergences taking place. For
Mm-hmm.
Australia, the market is pricing two hikes. For the United States, the market is pricing one cut. And for the Bank of Canada, the market is pricing nothing. So it's a beautiful relative play to capture some convex payout without adding any leverage, just the structure is leveraged.
Mm-hmm.
And 70% from the performance will come from the Australian dollar outperforming.
Sounds like a good plan.
I like these type of trades because you can open them for 3 to 6 months and just monitor
Yeah,
and
let
watch the
them work.
macro.
Yeah, monitor them,
Exactly.
see if the thesis works out, and then yeah, let the trade
Exactly.
go.
Yeah, I don't like taking any trades on a short time basis, like 1 week, 2 weeks. There's a lot of thinking, a lot of things that need to happen. You are betting on volatility most of the time if you take a short-term trade, 1 week, 2 week, because you want this quick move in the price, which is basically nothing else than volatility.
Hmm.
So I would like to take more of a good structured, well macro supported trades that also allows me to make money while waiting.
Yeah,
You know, this is what we do. Was a
that's
good
the
week.
ideal plan, the ideal
Yeah,
situation.
ideal situation. It's kind of tough sometimes to build trades like this because again you need the everything to line up with it.
Hmm.
The volatility conditions, the liquidity conditions, the macro conditions, and the right calculations because you don't want to oversize or you don't want to undersize. But in reality, this is the trader dilemma. You know,
Yeah.
You-
Oh,
this
it's
is
like, oh, I have this great opportunity, but I can't go all in because that'll be dumb.
exactly,
Yeah.
exactly. This is the dilemma. You know, like for me, it's always the same on trades where everything goes perfect. Most of the time, I am undersized,
Yeah. It's
and
always,
and
yeah.
I could have done
It's
more.
always going to be the same story. Afterwards, you're like,
Exactly.
oh, I wish I would have done more, or I would have gone like
Yeah.
deeper into the trade, into the position.
Yeah.
Yeah, yeah.
I wish I had gone bigger on that trade. So it's quite tough. Quite tough. But yeah, man, with that said, it has been a good week. Macro-wise, also other data coming in from across the globe also looking good. Just stick to the game plan and you will be fine.
I swear, man.
Just stick to the game plan and it will be fine.
Yeah. Well, with that being said, it's a quick recap or a quick sum up of what's been going on this week. Obviously, I hope everybody who's looking or watching also has had a good week. I think generally people should be performing quite well. Who knows? Maybe they scored at XLE or something and not feeling so happy, but they don't. But yeah,
You know who is not happy? The people who are trading meme coins.
oh, the crypto physics.
Where is Bitcoin,
Oh,
bro? Where is
no.
Bitcoin?
It's flat today. Bitcoin is, so look at the weekly for the last 7 weeks, it's done missing. Before that, it was just getting fucked. Like, oh man.
Yeah, it's tough.
The
Because
crypto.
as I said, liquidity conditions are getting tighter and high assets on the far right of the risk curve will get hit. So speculative assets are tough to trade. Another thing before we end up and wrap it up, the Bloomberg Commodity Index is getting
Mhm.
rebalanced. So if you look at it, everyone is thinking, oh, we crashed. No, 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 no. It's just we are getting some rebalancing taking place from the 8th of January to the 14th, and they will change the weights. So I would look up into their website and see what's going to be removed and what's going to be getting added, which is also quite interesting because the last couple of days we saw some resistance on gold, which I think it's because of the rebalancing. You know, we had this
So what
breakout.
do you think about gold? Because a lot of people, I believe, will be saying, yeah, maybe with oil rising again, or maybe with all the geopolitical tension, Trump and Russia and all that stuff, gold, not only for inflation, but for geopolitical risk, will be for good assets. But what do you think for this year?
Listen, for me, as I said, once everyone starts talking about the trade, it's done. I know we broke out of new all-time high in commodity cycles and they go on, blah, 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 blah. But the narrative is too crowded right now.
Yeah.
So I need to see a flush. Once I see a flush and I see people starts losing faith in the asset,
Mm.
there's where I want to get in. Because on a macro basis, nothing changed. Nothing has changed. Everything is looking good. But from a positioning or from narrative perspective, we are a little bit overheated, especially on silver.
Yeah, yeah,
Like,
silver. Yeah.
man, that volatility, if you look at the implied volatility on the future curve, on the futures, if you look at the CVOL, skew and skew ratios are diverging from each other. And skew ratio is nothing than um, put out of the money put volatility divided by out of the money call volatility. And usually calls usually skew and skew ratio move together. You
Hmm.
know, it's logical thinking. But once you see that the skew ratio is diverging from the skew, one is going up and the other is going down, this is telling you that put out of the money volatility is increasing faster than call out of the money volatility,
Hmm.
which is another sign for hedging pressure taking
Yeah.
place.
Yeah. It's like
So
typically, yes, there's a little more hedging, and like if you look at the SPY or whatever. But if it's like moving in a more extreme way, then you know, all right, it's time that this stuff could be turning around. And then,
exactly.
then afterwards, everybody's like, oh no, silver's done or whatever. Then it's okay. Start looking into
So
it. Start to time to think about it.
I think we could go to 100, we could go to 200, we could go even to 300. We don't know. But one thing I know is at some point and at some day, we will see silver down maybe 10, 15%, 20% in one day, flashing out this speculative bets and trading back to its equilibrium, which is reflected
Mm.
through the real fundamentals of the asset, and also reflecting the mechanics that are taking place with the skew and skew ratio. So for me, I will stay away from metals. I was long copper, traded take profit, was a beautiful one for me. I went long back in September, and I was long platinum and palladium. And also, I'm exiting these positions because such a parabolic moves don't last. And I don't want to be the guy who's holding the bag, you know. I want to be the guy I got in, made my money, got out. I'm not marrying any investment, you know, just dating it till it's not performing well anymore. I'm getting
Then it
out.
gets switched out and the next one.
Exactly, exactly, man. This is how you do it. This is how you do it. Yeah.
All right,
So
man. This
be
sounds like a
careful.
great lesson to take.
Exactly. So be careful. Playing gold, playing silver, be careful. You will get an opportunity to buy. Trust me. And even if you get a consolidation, because there's two types of correction, either
Yeah. You could
through
either, yeah, either
price.
consolidation and then like
Exactly.
it's staying
Yeah.
around here for some while and then the story kind of calms down and then it
Yeah.
goes like a next move. Or yeah, we
Yeah.
pull back and then
Exactly. Either through time. There's two types of correction, either through time or through price. And I'm waiting for one of these two to happen. Same we saw back in April 2025. Remember, gold topped till August. We had a consolidation for a couple weeks, couple months, and then we had this crazy breakout. And now I'm waiting for a couple months worth of consolidation or a price correction to get in back in the trade. Just keep it
perfect.
simple.
Well, with
With
that being
that
said,
said,
yeah. So, yeah, I hope everybody has a good next week and a good next couple of months, and we'll see each other back the next. All right,
take care,
perfect.
everybody.